Well, L&T's numbers will flash for you on your screen in just moments from now. I'm just reading out from the press release itself. The order inflow has gone up 37% this time around. The revenues are up by about 18%. Okay, that's the net profit. 1,215 odd crores, better than what the street was estimating. A tad bit better rather. So 1,170 crores is what the poll was, and 1,215 is the number. The revenues are also better than street estimates. So 28,283 crores versus 26,465 crores. And the order inflow, as I mentioned, has gone up 37% this time around. The management says that there was a robust growth in the services business and a recognition of revenues on completed performance in the realty business, etc. So all of that has led to the order inflows going up by about 37%. They also speak about the new orders. They've won new orders worth 36,142 crores at the group level during the quarter ended June. That is the absolute number, which is the growth of 37% that we were talking about, with a pickup in domestic ordering activity during the quarter. International orders have come in at 9,404 crores, constituted 26% of the total order inflow. So as of now, the numbers, top line, bottom line, looking better than what the street was estimating, and strong order book is what we have. Anisha is also here. Anisha, some quick thoughts on the initial few lines that we're getting?
Well, I've not been able to reach out to the press release, but the numbers that you have dictated seem to be in line with expectations. Now, the profit figure might be a bit of dampener for some because the range was as wide from 1,000 crores to 1,400 odd crores. Because remember, there was a one-time gain of around 250, 300 crores that the street was expecting. So might be a tad bit of dampener when it comes to the bottom line, but the top line looks completely fine. Even order inflow, if you look, 37% growth. Now, there were expectations as high as 50,000 crores on the order inflow, but I don't think the street will be disappointed at all.
I'm just going to read out some more numbers for you until you get the press release. The infrastructure segment orders have come in at 19,395 crores, which is an increase of 16% on a year-on-year basis. The growth was mainly driven by turnkey projects awarded for rural water supply and lift irrigation schemes. The international orders contributed to around 23%. So looks like the infrastructure segment order pickup has been quite good, and the margins.
The revenue, just to add to the order book itself, the infra revenue is up about 9% at 12,000. So as you're saying, Sonia, I think the infra segment has really kicked in this time around, and maybe that's why we're getting the beat on the top line.
And you were talking about the margins from infra segment. Well, you have that number?
Yes, actually the segment recorded an EBITDA margin of 6.8% during that quarter versus 7.1% in the corresponding quarter. They've also spoken about why the EBITDA margins have declined in infra. They've said that it's because of the mix of jobs under execution. So maybe low margin jobs have been executed this time, and the expected credit loss provisions on contract assets under the newly introduced accounting norms. All right, so these are many numbers that we've put forth, but just to simplify a little bit, revenues look good. The infrastructure segment has picked up. The order book looks good, but on the operational performance, how would you?
No, that is what my concern is as well, because the infra segment margin dipping would not be taken well, and the expectation was that the infrastructure segment, which is the core to the company, is expected to do better, and the street was expecting 100 to 200 basis point improvement on that. Now, there it has declined. Now, you're mentioning that there's a bit of one-off and a provision that they have come, so we'll have to see net of that how the business has done, but my assumption is that on the operational front, it would not go down well with the street. Yes, the top line growth has been steady, but do remember again, there will be one-offs of Kattupalli revenue coming into the picture as well. So that is one thing to note, because other than that, the numbers are good. There's nothing wrong as of now, whatever I hear, but there's no major beat also coming, because the order inflow also is pretty much in line with expectation, 37%, no major shakes coming in there, and operational number is something that we'll have to read out further, because infrastructure segment not doing well is always a problem for L&T. So that's one thing to watch out for. But in terms of the top line, yes, as we've been mentioning, 28,000 crores, I don't see any problem with that.
So just want to also talk about the outlook, what we have in terms of commentary as of now. The company is saying that private sector investment is still muted, so they're acknowledging that once again. But they're saying the government is focused on development of infrastructure and energy facilities, and that should continue to show some traction. So the momentum is expected to continue despite macroeconomic volatility due to oil prices, currency, and potential global tariff barriers. So there's an acknowledgement of these international tariff wars even in the L&T press release. The recent surge in oil prices is expected to incentivize infrastructure and hydrocarbon capex in the Middle East. So they're hoping that that will at least lift their Middle East revenues. Let's just get some reactions in as well. We have Ranjit Sivram of ICICI Securities joining in. Ranjit, let's come to you on the top line, which is slightly ahead of our consensus estimates. But how would you react to the slight dip that we've seen in the infra business margins down to just under 7% this time?
Yeah, but infra margins again depend on quarterly basis, and also we have to understand, is there any AS 115 change in the
okay, Ranjit, we're having some issue with the phone line. So what I'm going to do is I'm going to try and touch base with you once again. In the meantime, we have Prakash Diwan who also joins in. Prakash, you know, as we were just reading out, the top line looks really good, but it's the operational pressure that I think would be a bit of a concern. Infra margins have slipped to 6.8% versus 7.1%. They say there's a credit loss provisions on contract assets because of which the margins were hit. But nevertheless, what would your initial reading be of the numbers?
Yes, I don't see this to be, disturbing at all. In fact, what was expected from L&T was that even if they were they managed to maintain the newfound, momentum in some of the other businesses, particularly hydrocarbons, that would offset all these other weaknesses. And we also know that the environment has actually not changed. I mean, unless you start seeing new projects getting commissioned, particularly from non-government, businesses, it's not going to move the needle much for LP's infra this thing as well. So I think 6.8 might seem optically, yes, it's not very healthy or something, but at least they're able to maintain the top line growth.
Yes.
So that is where the comfort is. So you have to give it a chance. Too much.
Okay, I think there's a bit of an issue with that line as well. I just want to point out that the hydrocarbon segment order book has gone up by 23%, coming in at 28,377 crores, and the revenues in the hydrocarbon business have gone up significantly, actually 38%. Anisha, how does that sound?
Well, yes, hydrocarbon was one of the things that the management was talking about is picking up, and the good thing or the bad thing with L&T is that they have so many diverse exposures that one thing balances out the other, because hydrocarbon, I remember just a year ago, was actually causing quite a bit of problem for them. Now it has improved considerably. Even if you look at the EBIT coming in from the hydrocarbon segment, that has come at 200 crores versus 140 crore that was there last year. So hydrocarbon is one thing that has picked up seriously for them, because the infrastructure segment, if you're looking at the top line growth as well, there it is a growth of around 7-8%, as I see 12,300 crores versus 300 crores that they had reported last year. Of course, we knew that the IT services have done well for them, the financial services has done well for them, both in terms of the EBIT as well as the top line contribution. So that was factored in already. So hydrocarbon is a bit of positive. Power, we know, has been languishing. So even if the revenue is down 70%, I don't see a bit of shocker there, because we know that power is not
the other business that's catching my eye obviously is defense and aerospace, which they've started reporting differently this time around. And it seems execution is gaining some traction there, because the order book is anyway robust. 11,600 crores is the order book. The revenue for this segment has shown a 34% increase year on year. So the revenue from defense is beginning to now trickle in, and the important bit is that it's a bit positive now. There's an EBITDA margin of 11% in the defense and aerospace business, as opposed to negative margins still last year. So those are some green shoots, perhaps some pickup that we're seeing, and in a business that this company has been obviously very optimistic and bullish on.
Well, yes, it did deliver a couple of big orders in this quarter, and it reached the completion stage when it comes to a defense business, and that's why you're looking at that uptick when it comes to defense. Though the management has been very clear that in FY19 do not expect any big order inflow from the defense sector. They do understand that the government's large orders are getting delayed. So FY19 they clearly said that do not expect any big orders, but yes, the ones that they have in hand, they're executing it at a faster pace, and they're even they have filed one or two complaints with the government as well of why you're nominating just the central government for the defense orders, and you have to give to the private as well. So defense is again one sector that the street is watching out for. My only problem with the numbers right now is just the infra segment EBIT, where truly there might be a case of a credit loss provision coming in, but we'll have to wait back for the management commentary to see that. But again, neither a major big positive coming from the numbers, neither a big disappointment.
Okay, that's true actually. The only niggling worry I think is that is the margin figure, but stripped of that, it looks pretty good as far as the order book is concerned, both in infra, in hydrocarbons business. So, you know, doesn't seem like there's any major negatives in the numbers this time around. Abhineet Anand of SBI Cap Securities is also with us. Abhineet, what did you make of the order book? I mean, the infra segment orders have gone up by 16% year on year. Overall order inflows have gone up by almost 40%. This new orders of 36,000 crores, is it in line with what you were expecting? And how do you see the stock react tomorrow?
So inflows, I think, are slightly better than what we expected. But there was a low base last year. So I think inflows are a bit positive. More so concerning is from the fact that infra growth is around 9% in terms of sales, and margins are probably flattish to a bit lower YoY. So that's a bit of a concern, I suppose.
Okay. So what would your recommendation be on the stock now after looking at these numbers?
So we have a hold as of now, and I think any changes, etc., we need to go through the con call before making any changes.
Oh, absolutely. I think every quarter we wait for the management commentary, and then a lot of people take their calls. But for now, last time the management commentary was very positive, remember, and that a large part of that has played through, I guess. Most segments have done well this time around. I think we're back with Prakash Diwan as well. Prakash, your view on how to approach the stock? I mean, it's had a fairly good run, over the last few months. In terms of further outperformance, do you see some more upsides coming through?
Certainly, Sonia. So, I'm glad you alluded to the last con call, the last quarterly earnings call. And there the management explained very clearly going forward strategy is to focus on a few businesses which give them the core strength and get out of all the businesses like port and shipping and all which were not making sense, including some of the road assets that they had. Now, this time you have infra, hydrocarbon, and the new baby that's coming up, and that's defense. Now, these are verticals where there's very high entry barriers for others to get in. So once the economy picks up, the government spending, capex from private sector picks up, the stock has to get re-rated, and it will play catch-up with all its subsidiaries. I mean, you have Infotech, technology services, L&T FH, everything is doing so well. So I think the stock will definitely get looked at very positively, and it hasn't really participated wholeheartedly as much as the other heavyweights have. So, there is a little bit of a catch-up, and of course the EPS upgrades will support that, is my view. By end of day today, people will go back to the Excel sheets and then make sure that, the base is now better for them to grow here on. And that's where the rating also would kind of be much more healthier.
All right. So thanks a lot for that, Prakash. Strong order book, good numbers, beating estimates slightly. Last word from your end, Anisha?
Well, I think the numbers are not a major disappointment at all. The top line execution is really strong, and that is what the street would like. A 2,000 crore beat on the top line versus our poll should go down well with the street. As far as the margin is concerned, yes, a bit of dampener, but we will wait by to hear management commentary. What part of it is actually a provision that they have made, and the changes in the ASS caused that dip. If on a like-to-like basis, if it has been maintained, or even if there is a slight bit of expansion, that would be taken very well by the street. The order inflow is in line with the expectation, 37% growth. The number came in at 36,000 crores, bang in line with the estimate of 35 to 40,000 crore range. So overall, it doesn't look to me like the stock will react either way. Very, will show a strong move on either side. It would pretty much be a very range-bound movement on the stock, because it has been doing well over the last 3-4 days. We have seen quite a bit of uptick on the stock. So maybe no major disappointment and nothing to be excited about as well.
Okay, so